Our custom-developed forex ZigZagValue Bars indicator. The ZigZag indicator is a basic tool that analysts use to find out when a security's trend is reversing. By determining the support and resistance areas, it helps to identify significant changes in price while filtering out short-term fluctuations, thus eliminating the noise of everyday market conditions. It is an excellent tool for any trader who follows indicators that use swing highs and swing lows. The ZigZag indicator. To use the ZigZag indicator, a percentage of price movements must be set. Although the default value for a ZigZag is 5%, a setting of 9% would ensure that only price fluctuations of 9% or more would be shown in the chart. This eliminates smaller price swings and allows the analyst to see the bigger picture. Normally, closing prices of securities are used, and imaginary points are placed on the given chart where the price reverses by the set percentages. These points are then connected by straight lines and the required information appears. Feel free to use this indicator together with our other technical indicators, oscillators, momentum, or price action methods to maximize your trading accuracy. The indicator is used to help identify price trends. It eliminates random price fluctuations and attempts to show trend changes. Zigzag lines only appear when there is a price movement between a swing high and a swing low that is greater than a specified percentage, often 5%. By filtering minor price movements, the indicator makes trends easier to spot in all time frames. The zigzag indicator is often used in conjunction with Elliott wave theory to determine the positioning of each wave in the overall cycle. Traders can experiment with different percentage settings to see what gives the best results. For example, a setting of 4% may define waves more clearly than a setting of 5%. Stocks have their own patterns, so it is likely that traders will need to optimize the zigzag indicator's percentage setting to suit those securities. Although the zigzag indicator does not predict future trends, it helps to identify potential support and resistance zones between plotted swing highs and swing lows. Zigzag lines can also reveal reversal patterns, i.e. double bottoms and head and shoulders tops. Traders can use popular technical indicators such as the Relative Strength Index, RSI, and the Stochastics Oscillator to confirm whether the price of a security is overbought or oversold when the zigzag line changes direction. How to calculate the zigzag indicator. Zigzag indicator limitations. Like other trend-following indicators, buy and sell signals are based on past price history that may not be predictive of future price action. For example, the majority of a trend may have already happened when a zigzag line finally appears. Traders should be aware the most recent zigzag line may not be permanent. When price changes direction, the indicator starts to draw a new line. If that line does not reach the indicator's percentage setting and the price of the security reverses direction, the line is removed and replaced by an extended zigzag line in the trend's original direction. Given the lag, many traders use the zigzag indicator to confirm the direction of the trend rather than attempting to time a perfect entry or exit. Look at the exemplary chart below. This is how the zigzag line looks like on the price chart. It zigzags from the lowest point of the price to the highest point, showing the direction in which the price is moving. The price is in constant motion, but it does not go in the straight line. Even in the uptrend, it sometimes goes down, and in the downtrend, it occasionally rises. With the zigzag indicator, you get a clear picture of the price direction. It connects the lowest and the highest points of the price, emitting insignificant shifts along the way. As with any other indicator, the zigzag comes with default settings. You can naturally change them if needed. To do this, click on the pen icon next to the indicator's name. When you increase the value of the depth of the zigzag, the indicator will refer to the bigger time frame, and so the noise will be reduced. The noise will be bigger in the time frame that the zigzag refers to smaller when you choose a smaller depth value. Trading with the zigzag indicator. The readings of the zigzag are quite uncomplicated. When you see the indicator is moving up, you can assume there is an uptrend in the market. When it is zigzagging down, there is a downtrend. The zigzag indicator is used to analyze the price movement, but it is impossible to predict the future price behavior with it. You can analyze the past trends and reversal points, but it will not give you signals to open trading positions. That is why it is good to combine it with another indicator. Final words. The line of the zigzag indicator appears when the price moves between a swing low and a swing high. The indicator flattens the trend, and so it is